Do you really trust your bank in 2025? Think about this. In 2023, one of Silicon Valley's most prominent banks collapsed in less than 48 hours. Customers, many of them tech founders and investors, lost access to their accounts overnight. No warning, no backup, just silence when they tried to withdraw their own money. If it can happen there, it can happen anywhere. Most people still think keeping money in a bank is the safest choice. But what if I told you that this habit, this illusion of safety, might be one of the biggest traps of our time? While you rest easy, believing your money is protected, inflation quietly eats it alive. Political decisions, like Trump's latest import tariffs, raise prices and distort markets. And interest rates? They're stuck in a zone where your savings account earns less than a used car, loses in value every month. The truth? The financial system you were taught to trust is no longer trustworthy. Your money is exposed, vulnerable, and worst of all, idle. But here's the good news. You don't need to stay stuck. There's a smarter way. In this video, I'm going to show you 7 assets outside the banking system that not only protect your wealth, but build it. Each one plays a different role. Some generate passive income, others store value, and one might just reinvent the way you see money altogether. And the final asset? It's the most controversial of all. It's not something you own, it's something you build, and it might be the only real freedom you'll ever have. But before we dive in, I want to hear from you. Have you, or someone you know, ever been caught in a banking freeze, had funds withheld or experienced withdrawal limits during a crisis? Maybe in 2008, or more recently, during the 2023 regional bank runs. Share your story in the comments. You never know who it might help. Because the US economy in 2025 is not the one we grew up with. Inflation remains stubbornly high. The dollar has lost significant purchasing power globally. The new tariffs and rising interest rates are squeezing small businesses and middle-class families. And behind the scenes, banks are quietly laying off staff, merging branches, and tightening lending standards. You have a choice. Trust a system built to serve itself, or learn how real wealth is built, quietly, strategically, outside of it. Now let's dive into the 7 most powerful assets you can own outside the banks. Starting with a classic that turns rent checks into cash flow month after month. Asset 1, rental real estate, the brick-and-mortar ATM. Let's begin with something timeless, rental properties. Unlike your bank account, which passively bleeds value, real estate produces monthly income. Tenants pay down your asset while it appreciates in value. That's leverage banks don't want you to have. According to the National Multifamily Housing Council, rental demand in the US has grown for 10 consecutive years. Cities like Dallas, Charlotte, and Phoenix have seen rental rates rise over 20% since 2021. In a time when inflation is squeezing every dollar, rental real estate lets you shift from spender to earner. Sure, there are risks, maintenance, vacancies, property taxes, but today it's easier than ever to start. Platforms like Roofstock, Fundrise, and Arrived make it possible to invest in single-family or multi-unit properties with as little as $100. You don't need millions, you need strategy. And if you don't want to manage tenants or fix toilets, you can invest in fractional rental properties or use full-service property managers. Real estate remains one of the few assets where you benefit from cash flow, appreciation, tax advantages, and leverage, all in one package. It's not about getting rich overnight. It's about building wealth over time with something tangible, durable, and time-tested. That's what makes this asset the true ATM for the wealthy. Asset 2, online businesses, the scalable machine. While your money stagnates in the bank, a well-structured online business can grow 24/7, even while you sleep. Think digital products, drop shipping, or content-based monetization like YouTube or affiliate marketing. The global e-commerce market surpassed $6.3 trillion in 2023 and is projected to hit $8 trillion by 2026. That's not a trend, that's a shift. Millions are leaving the 9-to-5 and replacing it with automated income streams built from laptops, not boardrooms. You don't need to be Elon Musk. Platforms like Shopify, Gumroad, and Systeme.io allow anyone to launch automated businesses with minimal capital. And creators on sites like Udemy or Teachable are making 5 to 6 figures from a single well-designed course. Of course, not every business succeeds, but unlike traditional ventures, the cost of failure is low, often less than $500, and the upside, it's exponential. An online store can serve customers worldwide. A YouTube video can pay you for years. An ebook can become a stream of passive royalties. Online businesses are the modern gold mines. They separate your time from your income. Once built, they scale, evolve, and multiply with minimal effort. And unlike the 1% interest your bank offers, these assets reward you with real freedom. This is the age of digital leverage. If you can solve problems, package knowledge, or automate value, you can build an empire without leaving your house. Asset 3, precious metals, the economic anchor. Banks can fail, currencies can collapse, but for over 5,000 years, one store of value has remained constant: precious metals. Gold and silver aren't speculative, they're foundational. They don't promise explosive growth, but they deliver something more powerful: preservation. In 2025, gold prices crossed $3,000 per ounce, an all-time high, driven by inflation fears, currency debasement, and central banks stockpiling reserves. According to the World Gold Council, central banks bought over 1,100 metric tons of gold in 2023 alone. That's not speculation, that's preparation. Precious metals are immune to printing presses. They don't rely on credit scores, politicians, or board meetings. They just are. Silver, in particular, is also a vital industrial metal, adding demand upside in technology and energy sectors. Yes, they don't produce cash flow, and storage can be a challenge. But today, you can buy physical metals through dealers like APMEX or go digital via ETFs like GLD and SLV. Either way, you're holding something real, unlike the digital promise of a savings account. As Ray Dalio often says, if you don't own gold, you know neither history nor economics. It's not a get-rich play. It's a don't-get-wiped-out play. And that's why the rich own it, not to speculate, but to survive. Asset 4, productive land, the self-reliance engine. In a world where food prices rise and supply chains break, one asset becomes invaluable: productive land. Farmland, timberland, or permaculture plots all transform dirt into dividends. This isn't speculation, it's sovereignty. The USDA reports U.S. farmland values rose over 30% from 2020 to 2023. Billionaires like Bill Gates and investment funds like Manulife and Hancock are snapping up agricultural land, not for charity but for performance. Productive land creates value, season after season. It yields crops, rents, and long-term appreciation. Unlike stocks or bank accounts, land doesn't crash to zero, and it doesn't need Wall Street's permission to thrive. The barriers, it's illiquid and location-specific, but with platforms like AcreTrader and Farm Together, even small investors can access institutional-grade parcels. Some allow fractional ownership, reducing capital requirements. Land is not flashy, it's not trending, but it's essential, because when everything else falters, the world still needs food, fuel, and timber. And those who control the land, they don't just grow crops, they grow power. Asset 5, intellectual property, the infinite royalty. Imagine earning money from something you created once and getting paid again and again. That's the power of intellectual property. Whether it's a song, a book, a mobile app, or a template, it becomes a forever asset. J.K. Rowling made over $1 billion from Harry Potter royalties. But you don't need to be a global author. Digital creators are licensing fonts, selling PDFs, designing templates, and generating thousands in passive income from content made in a weekend. You can self-publish books on Amazon KDP, sell printables on Etsy, license beats, stock footage, or digital art, or build an app that solves a micro problem. With AI tools like ChatGPT, Canva, and Midjourney, the barrier to entry has never been lower. Is every piece of IP a home run? No. But it only takes one to change your financial trajectory. And once it's online, it keeps working, earning, compounding, all while your bank account offers interest rates that don't even beat inflation. This is wealth through creativity, not capital, not connections, just imagination and execution. And in the digital age, that's more powerful than any savings account. Asset 6. Private lending and peer-to-peer debt instruments, the quiet bank. Banks lend your money and profit, but what if you became the bank? With private lending and peer-to-peer debt instruments, you loan money directly and collect interest like the institutions do. Platforms like Ground Floor, Lending Club, and Prosper let individuals fund real estate projects or personal loans and earn 6 to 12% annually. That's 10x the return of most savings accounts with monthly or quarterly payouts. Yes, there's risk, borrower default, or project delays. But many platforms mitigate that through underwriting, collateralization, and diversified lending pools. And with minimums as low as $10 per loan, you can spread risk smartly. This isn't Wall Street, it's Main Street capital reinvention. You choose the terms, the duration, and the borrower. No middlemen, no hidden fees, just returns on your terms. Passive income from lending used to be reserved for banks. Now, it's open to anyone who's ready to take control of their capital. If your money's just sitting there, make it work, quietly, consistently. Asset 7. Skills that print cash. The wealth multiplier. This final asset isn't listed on any exchange. It's not held in a vault. It's stored in your mind. The right skills can print money. Period. Copywriting, coding, sales, digital marketing, public speaking, negotiation, these are high-income skills that generate cash on command. Warren Buffett himself said, "The best investment you can make is in yourself." While others wait for a raise, those with rare and valuable skills create income. They launch freelance businesses. They solve problems that AI can't. They build offers that convert. In 2024, the average freelance copywriter in the US made over $72,000 annually, with many crossing 6 figures. Learning has never been more accessible. YouTube, Coursera, Skillshare, it's all there. Low cost, high impact. And the ROI? Infinite. A single course can change your career or build a side hustle that pays your mortgage. Skills aren't flashy, but they're the most recession-proof, inflation-resistant, tax-efficient asset on this list because no one can steal what you've mastered. And the best part, no bank is needed. Keeping your money in the bank might feel safe, but in today's economy, comfort is the real risk. Inflation, low interest, systemic failure, these are silent enemies. But real wealth? It's built outside the walls of the financial system. So which of these 7 assets are you going to act on first? Leave a comment below and rate this video from 1 to 10 in terms of value. I read every comment because your financial future deserves attention. If you're serious about escaping the paycheck-to-paycheck cycle, these assets aren't optional. They're urgent because banks protect themselves. It's time you do the same.